Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. I hope all of you are enjoying your long weekend. And what we can see in the Nifty spot chart is recently market has bounced back pretty sharply. I think the extent of bounce back is close to 9.84%, which is almost 10%. Now, if you just have a look at this particular bounce back, you will be probably thinking that markets are extremely volatile, and the main reason is that markets initially corrected very sharply and then suddenly they took a U-turn. Yes, whatever you are saying, I completely agree. The markets were volatile, but why did this bounce back happen so sharp? There is a particular reason for it. And one thing you need to understand, this bounce back has not just happened once, but twice. This was the first time when the bounce back happened. This time it was not so sharp. The volatility was low. Second time also it is almost from the same level. You might think that this level is close to 22K and this level is 21,800. There's a difference of 200 points. But if you check this candle, the candle has not closed below 22K and there is a specific reason for it. For that, we need to go in the monthly time frame chart. In the monthly time frame chart, what you can see is that previous month was a very, very bullish candle. It was trying to engulf its previous month, which was Feb, and the March candle was pretty successful. The ongoing month is just 50% complete. We have a sort of hammer over here. As of now, so far, so good. It looks quite great because it is coming on the back of support confluence. The first support is coming from this 23.6% Fibonacci retracement, and the second one is coming from a particular trend line which is existing since mid 2022. So it's probably a 3-year-old trend line and it is a pretty strong one. So there are all the reasons why we had a sharp pullback. If you have a look in the weekly time frame chart, the trend is still down, I should say, but the momentum is certainly improving. You can see the way prices have shot up with high velocity. The momentum is surely improving. The RSI is also trying to go up higher. In the daily time frame chart, the momentum is also positive and the trend is also up. But what we need to understand is that we are within a range, and that particular range is 23,850. If we want the markets to trend higher, what we need is we need Nifty spot to consistently go higher, probably make a new low which is higher than the previous one, which did occur near 21,480 or 21,500. And then after this low, we again start going up higher. And this is not going to be easy. The main reason for that is recently whatever pullback has happened due to mainly the banking stocks, especially the private banking stocks, the finance pack little bit. These are the two sectors which have been responsible for this pullback. I do agree that there are few other sectors also which have recently participated, but I think the main one is banking. So going ahead, let's have a look at the Bank Nifty. Bank Nifty is way more different than Nifty. You can see very, very clearly. First of all, I would have a look at the monthly time frame charts. The charts are improving. They look robust, bullish. In the weekly time frame charts, I think the trend is also up. The momentum is amazing. In the daily time frame charts, the trend is up. Momentum is extremely strong, but I should say that prices are slightly overbought. You can see RSI has surpassed 70 and the prices have shot up way too fast on the upside. So some sort of consolidation is probable in the short term, but overall trend as of now seems to be up. Now you can see the difference between the private banking stocks and Bank Nifty, almost nothing. So that is the reason I was saying that the main rally has occurred due to the private banks rather than the PSU Banks. So I will not much speak about private banking stocks because I think the trend is up in all three time frames. Only thing is that we are slightly more overbought and overstretched in the weekly, specifically in the daily time frame charts, and we need some sort of consolidation or sideways move in the private banking stocks. Now moving ahead to the PSU banks, I would say that the monthly time frame chart is trying to take a bounce from this 38.2% Fibonacci retracement, which you can see on the right hand side. In the weekly time frame chart, the trend is flat. Neither it is up, neither it is down. Yes, prices are moving up, but the trend is not up as we are not trading above both of the moving averages. But the momentum is improving because slowly and steadily you can see the prices are rising higher. And if you have a look at the daily time frame charts, it looks for a relief that now it seems we are trying to go higher. This was a decent support, I should say, 6,060, 66. We had a one-day dip where the prices opened below the support, but you can see the support was so strong that while closing, prices closed above this particular support. Next day we opened gap up, again we came down, and again the prices are shooting up. I should say so far so good, it's okay. We are trying to go higher, but there is also a sense of supply coming from this zone of 65 20, 65, 50. So I think if we want the trend to continue higher, we will need more momentum in the PSU banking stocks, and we should see that the prices are moving higher. Again, only then we will be able to confirm that whatever strength has been shown in the last few days in the PSU banking stocks will not go in vain. So I think next 1 week is going to be very, very crucial for the PSU banking stocks. Energy pack. Okay. Energy pack, the monthly time frame chart is looking, I should say, average. But one thing which is interesting, which I've been repeating time and now again, that we are at a juncture which is a 61.8% Fibonacci retracement. And this is a zone where we have this previous top and this previous top, which was earlier a resistance, probably can work as a support now. Only thing is, in a monthly time frame chart, we should not be closing below that particular support zone. Going ahead with the weekly time frame chart, I think we can see signs of a reversal, a contrarian bottom in the energy pack as we have a divergence between the price and the RSI. Initially, we went for a pullback, a decent one. Suddenly we came down, but this gap down was not welcome by the market, and suddenly bulls tried to overpower it and started buying at the lower levels. And you can see once again the prices are trying to shoot up. So I think once we surpass this particular high, and before this high is crossed, I think this high of RSI will be taken off, and this will be a bottom failure swing. So I think not exactly a bottom failure, but it will be a sort of confirmation that the high in the price could be surpassed on the upside. So once this high in the RSI is taken off, I think then we'll have to watch this high in the price. Then the chances of that particular point of surpassing will be slightly higher than normal case scenario. And the level seems to be somewhere around 34,150. Okay. Auto pack, I think, yes, I would say that it has been able to pull back from the lows from 19,300 to 21,373. So far, so good. It's okay, but it is just a pullback because the trend is down in the weekly time frame chart. The trend is flat in the monthly time frame chart, and the trend is also flat in the daily time frame chart. So this is just a pullback, and so far I should say auto pack is still the weakest. From here, what happens in the next few days will be more important. That are we going to probably convert this pullback into a new uptrend by making a new high, or we are just going to go up, consolidate, and again dip down? I think this only will come to know in the next few days. Consumption pack. Now, consumption pack, what you can see is that we are trying to bounce from a decent support in the monthly time frame chart, which is the longer term time frame chart. Trend is flat in the weekly time frame chart. Momentum is improving. Again, in the shorter term time frame charts, I should say that we have seen bouts of buying over here, which is a good sign, fine. But again, if we see this particular chart with a slightly more sample of data, then we can see that this is the first high, the second one, third one, and now this is the fourth one. So the fourth high is still lower than the third one. So I think if we want this to convert into a strong uptrend, we will need to surpass above it, make a new low which is higher than the previous one, and only then it will be confirmed that we are now in a strong uptrend. Yes, so far so good. I do not deny it, but to let this rally continue, we need a little bit more confirmation, especially when we have corrected so badly in the last few months. Because in a falling market, at times it can happen that just a small pullback can give you a lot of hope, and then suddenly after a few days you will find out that it was just a pullback and price starts to correct. So rather than we're trying to get in early, it's always better to get in late but with slightly more confirmation on your side. Now, finance pack is one of the sectors which started rallying even before the private banking stock, and it is one of the strongest sectors as of now. Monthly time frame chart strong, weekly strong and overbought, and even daily chart is overbought and overstretched. Needs some sort of consolidation, but overall trend is on the upside. FMCG pack trying to take a bounce back from the 50% retracement of this entire uptrend. The trend is flat in the weekly time frame charts, but the price is slightly moving higher. I think it has been 1, 2, 3, 4, 5, 6, 7 weeks consistently only green candles. Yes. I think in the 7 candles, there have been only 3 candles which have been in green color. But we should also say that none of these candles closed in red. So which is a good sign that the momentum is on the upside and it is strong. It's going up. In the daily time frame chart, although the trend is up, we still need to have more confirmation on our side, because last time, if you see what has happened is after a very strong pullback by some sort of information, I think, which was shared by a respected FM, suddenly there was a big sell-off. So I think there will be some buyers which would have stuck over here. So once we start trading above 59K, above 59,500, only then we'll have a confirmation that we are in a new uptrend now. Infra pack is a sector, I think, which has recently tried a lot to start a new uptrend or at least give a pullback. Again, in the monthly time frame chart, you can see prices are trying to take a bounce from this 38.20% retracement. In the weekly time frame chart, it seems that the trend is flat. Momentum is not that great, but seems to be improving. The daily chart seems to be the most impressive by making a higher high, which is higher than the previous one, a good sign. Also, while this pullback was happening, if you just see this zone, this price cluster has done a wonderful job, because on this particular day when we had a big gap down, prices just bounced back, and it was not only just this particular zone but also this support, which is not very strong, but although it did help. And from this zone of 77.65, prices have moved on till 86.32. Good sign. But I would also say one thing, that just by having one big green candle closing above the previous high is not enough to induce confidence in bullish traders. We need the price to move higher on a consistent basis in the next few days and weeks. IT. I think IT is one of the most weakest of the sectors. The way it has fallen, it is looking extremely weak, although it was extremely oversold. Even the weekly time frame chart is now, I think in the last week, traded below 30, and now it seems it's a time for some consolidation or maybe even a pullback in the weekly time frame charts. All right. Metal pack. Now, metal pack, I think somewhere in this zone, somewhere over here, it was looking one of the strongest sectors. And I'll come to that point why it was looking so, and then what happened suddenly. Okay. So what happened earlier was metal sector was looking very strong as it gave a very good breakout, very good, I think, sideways breakout. It gave a zone breakout. It gave. After the breakout, if you can see, there was a hell lot of consolidation. And after the consolidation, I think when Mr. Trump started raising the tariffs across the world, we had a sudden sell-off, and this sell-off was very bad. I think this single day took a large cut in the metal stocks. I think this single day fall was of close to 6% or a little bit more than that. So I think the metal stocks would have also fallen by 6 to 7% on a single day basis. Then we made a new low. We are trying to pull back, but now it seems as of now, metal is also not a very, very strong sector. It is a weak sector. So I think the trend is down and we have just managed to give a pullback. What happens after this pullback in the next few days, especially in the next 1 week, will be very, very important, because we'll come to know that is it just a pullback and after that we are going to collapse, or we'll continue rallying. That is something which we'll need to find out with time. Pharma pack as of now, it seems to be a sector which is consolidating in the monthly time frame charts. It is also consolidating in the weekly time frame charts. You can see sudden rise, sudden fall, and sudden pullback. So that is the reason we can see this sort of movement as of now. The trend is flat in the weekly time frame charts. The trend is up in the daily time frame charts. It is improving, but overall quality of the trend in the daily time frame charts is not up to the mark. So I think next few days and weeks will be more important in deciding about the overall state of trend of the pharma pack. PSE sector. PSE sector taking a support in the long-term chart of monthly time frame from the 38.20% retracement, a very good sign. Initial pullback was very fast. Then we had a throwback on the downside, which was taken care by this very, very strong support, especially this candlestick cluster. This one day, I think, had a very big candle, and after that we have all the green candles which are of smaller size. So I think the trend is up, but the confidence in this trend by the bulls is not very, very high. So I think we need two things over here. We need this price to continue going higher above the Thursday's high, and we need big green candles seeing in the next few days. Only then we'll have a bit more confidence in the rally of PSE sector. All right, Realty pack. Realty pack trying to take support from this 50% retracement of this entire uptrend. This is a cluster of support from where I think it's trying to gather its strength. It's trying to gather momentum, but the momentum is lacking a little bit. I think in the next few days, it will be evident that how things are shaping up. There are chances that momentum can improve, but I think if we can surpass this high, it will be a lot better for the real estate sector. But just understand one thing, that in this entire pullback, we have only one single candle again, which is a big green candle. All other candles are either red, or else if they are green, they are candles with smaller bodies, which is something which I don't like. So we need big green candles, and we need this level to be taken off on the upside. Midcaps, they are trying to take support. I'm pretty sure they're trying to take a long-term support from this 38.20% Fibonacci retracement. In the weekly time frame chart, I think there was a bit of volatility, because this is one sector which did not retrace by 50% or 38% or 78.6. This retraced completely 100%, which is probably not a great sign, I should say. Not a bad, but not a great sign also. But nevertheless, it's trying to pull back. Momentum is high, state of trend not very good. If we surpass this level of 52, 875, 890, I think it'll open room on the upside for a little bit more pullback in the next few days. Now going ahead, by looking at all these sectors, I should say that we should not just be blind and happy by seeing that Nifty is going up and all the sectors are pulling back, because we need to keep a sense of the markets very clear. Yes, we have pulled back in the Nifty, but the pullback has happened on the back of banking stocks, especially the private banking stocks and the finance pack. One more sector which has started to improve seems to be the infra pack, which is good. But all other sectors are still trying to get out of their negative zone. So don't be mad at the markets. Don't participate in the markets by doing some blind buying or something. Take a seat back, analyze the charts twice, thrice, understand the risk reward ratios properly, know your levels correctly, and only then deploy your money. I'm not saying markets are bearish, neither I'm saying markets are bullish. It's a good sign that we have pulled back from a very good long-term support, but we need other sectors also to participate, because generally when in a market, when the rally is participated by many sectors, it's a strong rally. All right. So I hope this video was helpful. Trade less, trade wisely. Thank you.